What's up, everybody? It is Brian from HASHWAREHUB, and we're coming to you today with another video on the markets. So hit that subscribe button, hit the notification bell so you get all of our information coming directly to you like a funnel. And we are going to get into it right here. What we're looking at now is a Bitcoin daily chart. So each candle represents one day. Now, we came out with a video yesterday, or several videos, and one of the videos was specifically talking about protecting your profits. And it wasn't by mistake. It was by design, because that's what we would be doing. That's what we are doing through our trades, is protecting profits. And you may say, well, that was just luck. Or you may just say, well, the reason why that happened was because of the fact that people were switching from, Bitcoin to Bitcoin Cash. It was a movement of funds. Well, quite honestly, the way we look at things, that's all a bunch of BS. So people tend to take stories, fundamentals, and use them as reasons as to why the price moves. Price is going to move because the price is going to move. The price doesn't move because of fundamentals. I know it's kind of turning things on its head, but that's the way we look at things. And that's the way you should look at things too. Trading based on fundamentals never works out in the long run. I've never seen it work out in the long run. Trading through technicals does. So the fact that people are saying that it's a shift of money from one coin to the other because, Bitcoin Cash now is going to be on Coinbase, I don't think it has anything to do with the fact that Bitcoin ran down. Not at all. It ran down because it was up and because our indicators were telling us it was going to go down. What was telling us this? So we'll show you. So if you remember our previous videos all through the past few days, we've been saying, hey, go ahead and start taking some profits. Why? Because the market levels were so far away from the blue line. And anytime that happens, there is a reversion to the mean. So another way to look at the blue line is almost like a mean line. Where's the reversion of the mean? It's not specifically a mean line because the mean line is actually a little bit higher than that. But it is a line that normally the market will revert to. So, and that's exactly what we've seen in the past, and we'll always see it going in the future. So here the market had a long stretch of days. That's kind of 1, 2, 3, 4, 5, 6, 7, 8. 8 days where it was very far away from the blue line. That's a very long stretch. It doesn't last for very long, and with each day that passes by, the probability of it reverting back to the blue line or getting at least closer, significantly closer, gets higher and higher. That probability gets higher and higher. That's the first thing. The second thing is detrend. Okay, if you watch our videos and you're familiar with the way in which we look at things, detrend is usually one of the first signs to show us that there's cracks in the fundamental or the technical foundation of the actual market that you're looking at. So I don't mean fundamentals as far as news stories are concerned. I mean the fundamental, the underpinnings, the structure of the market has some cracks in it. And so what we had seen was a bit of a divergence. The trend was going up from this bottom here, okay, and then there was this top right here. That signifies the same spot where the market had topped out here. But the detrend from this point going down started going lower, okay, but the market started going higher. So what is that? There's a divergence. And that divergence is usually a sign to us that the market will eventually go in the direction of the detrend. And this is just the first start of it. Now, it's not to say that the market will continue to go down. By any means, that probably won't happen because so much money is going into Bitcoin. However, at the same time, you have to take your position and the risk that you have by holding your position. You have to bear that in mind, and you have to manage that. So by selling up here, like we kept on saying over and over, you can possibly purchase down closer to the bluer line. And if you were super aggressive, you could have even gotten in at the bottom of this candle. Now, it's not to say that this won't go from here and it won't rip up straight up into the stratosphere. Okay, that could possibly happen. However, it makes sense to go ahead and manage your risks. And that's what we're all about, is managing the risk of your trade. Of you managing the risk of your trade based on the way in which we go about doing it. We show you what we do. If you want to follow along, cool. If you don't, cool. Doesn't make a difference. I'll still be making these videos. So, this is Bitcoin. Let's take a look at the next one. Let's look at Dash. Now, Dash is on a huge run. Okay, again, 1, 2, 3, 4, 5, 6, 7, 8. So 8 days, it's significantly away from the blue line. And the few days prior to that, it was all on the blue line. Okay, so this is almost like a springing up. You know, the energy was being built up as it's on this blue line, and it springs up. So now, with that in mind, the trend index is slowly creeping up, nowhere near to the same extent that the market is, right? So if you look at here, when the market went from here to here, the trend index had a similar slope. Now, we don't see that here. However, I'm not calling it a divergence, but it's just things that we look at. We look at very little changes. So, again, protect your profits. With Dash, you wouldn't be foolish if you started selling some of your position here and picking it up at a lower price point. There's nothing wrong with saying that, with doing that. It's a great way to go ahead and compound your profits. Take some profit off the table, you reduce your risk, buying at a lower price. You can then buy in more shares than you did prior because you have more capital now due to the profit. You can buy in more shares because the price had come down and you sold up here, so you can buy more. And then, since you bought more, you're compounding the capital that you had. Next, Ethereum. Ethereum, similar like Dash. Okay, didn't have as many days that it's been significantly away from the blue line, but it's had a few. Again, you would not be foolish if you went ahead and you sold off some here. Even if you sold off some here. If you sold off some here and you sold off some here. Seriously, it's an amazing trade. These percentages are gains are enormous. They're huge. So, don't be greedy about it. That's what it comes down to. Don't be greedy about it. Try to win every time. Next, let's take a look at Litecoin. Litecoin. Days that are away from the blue line. 1, 2, 3, 4. Okay, 4 days. So even with Litecoin, you could have gone in at the bottom of this candle right here, based on where the blue line was, and man, from where it shot up, I think we were talking about this yesterday. Let's say you got in at like 260, and then today it closed at like 350. That's 90 points on a $260 coin. What is that? 30%, almost 30%? Yeah, almost 30%. So it's great. Now, what are we seeing? We're seeing the trend peaked out here, okay, and it's coming down. What happened to the market? Peaked out here, and it's going up. A divergence. Again. Now, will this come down and come to the blue line? Possibly. But as every day goes by where it doesn't, the probability of it doing that gets larger and larger, especially when the D trend is going in the opposite direction. Okay? So I think those are all the coins we're going to be going over today within this video. We're going to be making a few other videos today as well, or tonight. It's December 19th at 10 o'clock. So we're going to try to get these out as quickly as possible. But anyway, yeah, that's what we got going on. So any questions, just put a little comment down there. Hit subscribe button. Hit the notification bell. And happy trading.